Our next speaker is Dr. James Mitchell. He is going to give us a presentation on the beef cattle market outlook and profitability drivers and marketing opportunities.
Welcome. My name is James Mitchell. I'm an assistant professor and extension livestock economist with the University of Arkansas System, Division of Agriculture. I am recording this video for the Healthier Cattle, Healthier Bottom Line webinar hosted by our Livestock and Forestry Research Station on November 17th, 2021. The goal for my talk is to provide a very summarized version of a cattle market situation and outlook talk. If there's something that I don't cover or something that you'd like to visit about, make sure to submit your questions in the Q&A, or I've also provided my contact information at the bottom so you can email me or call me with those questions if we don't get to your particular question or your particular thought. To jump right in for these talks, for those that have seen me do one of these before, I like to start by looking at the supply and demand fundamentals for the markets, and then that gives us a good picture of what prices are going to do, right? Prices are determined by both supply and demand. You need to have a very good idea of what those supply and demand fundamentals are doing to have a good sense for what markets are going to do and what we're observing in terms of what markets have done. Best way to look at supply is to start with farm level supply. Supply for beef starts at the farm. The biggest factor that I think we've all been looking at and wondering about is the drought situation and what that means for the size of the U.S. beef cow herd, right? One way to do that is to look at weekly federally inspected beef production. So for all my slides here, the University of Arkansas colored line is going to be the 2021 data, blue line is the 2020 data, and the solid black line is the 5-year historical average. And so with this drought, there's a significant portion of the United States is in some degree or some drought category. And what does this mean for the size of the beef cow herd come 2022? And, this summer, at least, the thinking was, there's two things that can happen with a drought snare like what we're seeing in 2021. We can either cull cows earlier, or we're going to cull a larger number of cows total, regardless of the time. And, if you'd asked me a few months ago, I probably would have said that too early to tell. We were slaughtering a pretty significant number ahead throughout the summertime, and I would say I would have a pretty good idea of what things were going to do if I had a sense for what slaughter was going to look like in the fall. So in the fall in the U.S., we tend to slaughter or cull a larger share of our beef cows. That's when we cull most of our spring weaning herds and cull those cows after weaning. And really, you can see in the later time period of this graph that beef cow slaughter has held up quite significantly above 2020 levels, right? Year to date, we're averaging about 10% higher year over year. If we assume 10% holds throughout 2021, take 10% as a percent of the January 1, 2021 beef cow herd, and that actually results in a 11.5% culling rate, which would be the highest culling rate that we've seen since 2011. So the question is, okay, well, what does that mean for the size of the beef cow herd come January 2020? One way that we can try and answer that question is to look at the relationship between the previous year's cull rate, so that 11.5% from the previous chart, and the percent change in the beef cow inventory year over year. And then we can use that relationship to try and predict what we think might happen in January 2020. And so numbers that are above 1 on this chart on the y-axis mean that we've added to the beef cow herd. Numbers below 1 mean that we've actually taken cows out of the beef cow herd. And so based off of that 11.5% cull rate, which would be towards the bottom right of this graph, we would forecast that we would expect to see a 2.1% decline in the beef cow herd come January 2022. Plotting that to see what that looks like in the grand scheme of things. So January 2021, we had about 31.2 million head, down 0.6% compared to January 2020. Based off that forecast for January 2022, we'd probably take out about 640,000 head based off that 2.1% decline. And if you go back all the way to the beginning of this data from 1991, the size of the beef cow herd has been in decline going all the way back to 1995. And we tried to expand in terms of beef cow herds, that 2024, 2025, 2026 time period, didn't quite get there. And so this most recent 2014 to present cattle cycle is really the first cattle cycle we've seen in quite some time where we actually added beef cows to the herd. And that number did peak in 2019. The calf crop did peak in 2019. And so based off this forecast, you can kind of see trajectory-wise where we're headed. Fewer beef cows means a smaller calf crop down the line. And that goes to the next part of this supply situation, is to look at what the cattle on feed inventory number looks like. So this is the monthly cattle on feed report that USDA puts out once a month for feedlots with an inventory of at least 1,000 head in terms of total capacity. And you can see, going all the way back to January of this year, we've had inventories that have been historically high. This is definitely a carryover effect from some of the COVID-19 disruptions that impacted our supply chain in 2020, right? Those disruptions really kept us from being able to place cattle April, May, June. And so the latter half of 2020, we placed quite aggressively in terms of cattle on feed. That's carried over into 2021 and has really resulted in a situation where feedlots have been really front end heavy. And so economists, including myself, have been saying since January, now once we work through these front end supplies, we're going to move into a much tighter supply situation. I said that in February, said that in March, said that in April, said that in May. And it's probably taken us a bit longer to work through those supplies than probably most analysts were expecting at the beginning of the year. But we have moved into a situation where inventories are below 2020 levels, maybe not as low as we'd like them to be, but the most recent data shows that on-feed inventories are 1.4% below 2020 levels. These three boxes for November are the analyst forecasts for the November cattle on feed report that's due to come out next week. This purple circle is the average pre-report expectation from analysts, and based off that number, we're expecting that inventory numbers are going to come down about 0.3% compared to 2020. So not significantly lower, but lower. But the overall trend is that, with 3 years of declining calf crops, that tighter situation in terms of feeders, cattle supplies will show up in this inventory number. And we are starting to see some of that. I think that it is going to take us until 2022 to really see the effects of tighter feeder cattle supplies. If you look at the placement data, we did place quite a few head September and October, and I think that's going to carry us through at least the first half of 2022 in terms of getting into a much more favorable supply situation. And then carrying it all the way back to beef production, right? So size of the calf crop determines the size of feeder cattle supplies. Those feeder cattle supplies determines feedlot inventories, which is ultimately what turns into beef. And so this is federally inspected weekly beef production. I've go ahead and provided the annual beef production estimate for 2017 through 2022. And then we can see, dating back all the way to 2017, we've added more beef to the system year over year. We're expecting that to actually peak in 2021. And with those tighter feeder cattle supplies and 3 consecutive years of a declining calf crop, we're forecasting about a 2.3% decline in terms of beef production in 2022. So certainly a much more favorable supply situation. And I would add too that this 2021 number is actually a record in terms of beef production, going all the way back as long as we've been tracking this number in terms of data. On the demand side, I thought I'd cover probably the topic that we've all at least seen some version of in the popular press, stories about the rate of food price inflation and the implications for the cost of this year's Thanksgiving dinner. And so there's really 3 parts to these stories. 1 is the rate of food price inflation. 2 is the implications for the cost of this year's Thanksgiving dinner. And 3 is concerns about what that means for beef demand. Looking at retail beef prices, this is the data that came out last week for October choice retail beef prices. October prices averaged about $7.90 per pound, up about 24% year over year. So this is the 4th consecutive month where this series has set records in terms of record high retail beef prices. But we do need to back up and look at what this means in the grand scheme of things in terms of overall food prices. And so this is a pretty busy table, but this is digging into that consumer price index, which gives us a barometer for overall inflation for the economy, digging into the food portion of that CPI index value. This column right here, the average 2021 versus 2022, is the average increase in food prices relative to 2020. So through October, food prices are averaging about 3.2% above year ago levels. And so certainly a higher rate of inflation in terms of food prices, but actually below where we were in 2020, 3.4%, and not far off, less than 1 percentage point off the 20-year historical average. So yes, food prices are certainly higher in 2021, but not outside the realm of what we've historically seen. And so comment one from those news stories is this is going to be the most expensive year in terms of the cost of this year's Thanksgiving dinner. Well, if we're just talking about the overall price level, by definition, the way inflation works is every year is the most expensive Thanksgiving dinner in terms of prices, right? Year over year, prices average about a 2.4% increase. Now, if you dig into the specifics, there are some items that have increased at a higher rate compared to others, right? So year over year, beef prices are averaging about 7.9% higher this year. Pork prices are 7.1% higher this year. Poultry prices are 4.2% higher this year. So yes, meat prices are higher than historically what we've seen over the 20-year average. But when we back up and look at the grand scheme of things, overall food price inflation isn't outside the possibility of what we've seen in the past. And the concern here next on that list is, okay, well, what's the implication for beef demand? Well, when we're thinking about demand for anything, especially during times of high inflation, we need to be very careful in terms of if we're talking about nominal, the overall price level, or if we're talking about the relative value of a good, right? So when we talk about demand, we're concerned with the relative value of a good. Nominal prices don't tell us a whole lot of anything in terms of demand. What really matters is what's the value of a good relative to other goods? How is that good able to be exchanged for another unit of another good? One way that we can look at that is to take these nominal prices and create some price ratios to look at the relative value of beef. So this dotted line is the price of beef divided by the price of broiler meat. This red line is the price of beef divided by the price of pork. And you can see that these relative price relationships have remained relatively stable throughout time. So yes, prices are setting records in 2021, but the relative value of beef compared to pork and compared to broilers is relatively unchanged. So my expectation based off of these relationships is that, beef demand isn't going to take quite the hit that I think the doomsday scenarios that we've probably been reading about would suggest. And even if we go beyond prices or relative prices for demand, price is just one component of beef demand. So long as the industry continues to provide a product that is tasty, freshness, food safety, price, and nutrition, and so on, this is a relative importance index from the meat demand monitor by Glenn Tonser at K-State, tracking over time changes in consumer protein values. As long as we align with consumer preferences, my expectation is that beef demand will remain strong to close out the holiday season and into 2022. That's a quick and dirty version of the demand picture. Quickly getting through the market outlook segment of this talk, looking at our fall calf market. Last week, prices averaged $160 per hundredweight, up about 1% compared to a week ago, 11% higher than where we were this time last year. And again, that black line is the 5-year historical average. So this is a chart that I take a lot of pleasure in presenting because we're actually seeing prices this fall that are kind of running counter to seasonal trends, and they're actually running higher than what we've historically seen, right? So you have to go back all the way to 2017 to find prices for 500, 600 pound steer calves in Arkansas that have averaged around 160. So markets have certainly continued to recover, certainly reflecting these tighter supplies. And we're again approaching a scenario where we're expecting prices to actually increase even more going into the future. So here I provided my price forecast for 500 to 600 pound feeder steers in Arkansas and 700 to 800 pound feeder steers in Arkansas. These top two rows are my price forecast. So expecting prices to finish between 154, 160 for the fourth quarter of 2021. Going into 2022 with the expectation of demand holding and tightening supplies, prices averaging 173 to 180, 178 to 185 for the second quarter of 2022. So our spring market. Heavier feeder cattle prices, 141 to 145 per hundredweight. Again, starting to see some more bullish strength in those prices as we move into 2022. And then these last three rows that you can read for yourself is LMIC's forecast for cattle prices in the Southern Plains. So Texas, Oklahoma, Kansas. On the feeder cattle market, you can see my prices are generally in line with where theirs are, keeping in mind that we are forecasting prices for different markets. They're forecasting for the Southern Plains. I'm forecasting for Arkansas, but I would say that I'm probably a little more bullish on calf values compared to what their forecast is for calf prices. But in general, the general trend is the same, regardless of the analysts that you're watching. We are forecasting prices to continue to go higher into the future. Then quickly wrapping up in terms of maybe one quick marketing consideration is to look at what the futures contracts are doing by contract month. So this is the November 21 contract, January 2022 contract, all the way to the August 2022 contract. And you can see that there's actually quite a bit of carry in this market. So there's actually quite a bit of gain or value of gain, if you want to call it that. And so looking at opportunities to carry some calves through the winter, provided your feed cost situation allows for that. There are some pretty good opportunities to consider carrying some calves through the winter and into next year. If the board's offering something that fits your situation, please go ahead and lock that in. If there's a situation here in terms of what the board's doing, what it's offering you, to lock in a pretty favorable margin. And so that quickly will wrap things up. Again, this is my newsletter I put out once a week with colleagues at Mississippi State and University of Kentucky. You can scan this barcode to get yourself signed up. And hopefully I kept on time, but that's what I've got. Look forward to your questions.